All right, folks, so clearly 2026, the psychology has changed. And you heard this time around is different. And you are right. In the past, people did wait patiently and they knew it's just a matter of time. 12 months, 24 months, worst case scenario, 36 months, we're gonna get back on our feet. There's the light at the end of the tunnel. However, this time is different because the clock is ticking faster than ever. And people are not only losing patience, but they have been already patient for 36 months. And there's really no light at the end of the tunnel, right? Like it keeps piling up like lasagna, right? Like it keeps piling up. Like something always new happens that kind of gets attached onto the old story and makes it even worse. And it keeps on going and going and going. So people are just waiting patiently, but they're waking up and they're like, look, I have to figure something out. Like I cannot just sit like a duck and wait. So there's 10 points I want to go and read, like I want to read together with you guys. So in past slowdowns, people waited confidently. In 2026, people are uncertain, hesitant, and risk aware. Confidence has not returned even where prices stabilized. Yes, because it keeps piling up like lasagna. It just keeps piling up. If it's not tariffs, it's this. If it's not this or that, it's the bank rates. If it's not the bank rates, it's your supply. If it's not the supply, it's the taxes. It just keeps on going and ongoing and ongoing, right? Housing is no longer seen as a safe bet. Real estate used to feel unbeatable. Now it feels conditional. Buyers are asking what if instead of how fast. And that is so true. I mean, now it's the time where people are opening up and they're like, what if? Right? Like, what if it actually crashes? What if the bubble that everyone has been talking about for a long time is actually true? It's not a myth. It can actually happen. So now people are in that hesitant mode. Every day matters. Every week matters. Every decision can set you back versus the decision making your gains by the minute. Liquidity is thinner than people realize. Listings exist, but transactions are weak. Sellers can list, but cannot exit easily. Markets feel active, yet frozen underneath. And many have tried, right? Many sellers use that analogy, let me list for what I want, my house is the best, and all that, old story. Got it. I invested this much money, I need this much money to exit because that's how much I invested, right? That doesn't apply anymore, right? Like I have the best kitchen in my neighborhood. Who cares, right? If the price is not right, you cannot demand a certain price just because you are in need or that particular math only works in your head because that particular balance sheet will set you free. But the market is not answering that particular balance. The old recovery playbook is not working. Rate cuts are not producing confidence. Price drops are not triggering demand. Initiatives are no longer enough. And we have seen it, right? Okay, dramatic in 2023. We have seen the biggest increase of history when it comes to bank rates. It started feathering down slowly. Fine, I get it, but it didn't change anything. It changed a little bit, but it did not bring the confidence back on the table. Why? Because there's not enough people. There's not enough people to fulfill all these holes in need. The middle class safety net is thinner. Job security feels weaker. Cost of living feels permanent. People are protecting cash, not chasing assets. And that is true. I mean, cash is king, and even that is not true anymore because cash has no value, right? It has value of liquidity because you can take it and you can buy, you can act on it right away. You can have access right away and all of that stuff, obviously, depending on how big the sum is. However, it's worthless, right? So you're turning towards real estate because it was the safety net for a long time. Now that's shaking. Like, where do people turn, right? Like, it seems like that the mother of all crashes is knocking on our door, right? Everything, stock, real estate, cash, everything, right? So many folks on this channel have mentioned like gold and assets and silver and stuff like that. I don't know. XRPs, I've heard many times, but I don't know. Comment below. What do you think? Investors are no longer leading the market. Speculative demand has faded. Cash flow matters again. Buy and wait is no longer a default strategy, right? Because investors have, they're relying, that's the word, they're relying on that particular cash flow. And they should have relied on it from day one because that's the actual right formula. Makes sense, right? Think about it. If I buy something and that asset, or in this case, a real estate asset like a condo or a house, right? With my down payment, with the purchase price, that tenant should be able to cover it. And me having a positive cash flow, or worst case scenario, zero. Okay? That's one-on-one investment. However, right, for a long time, because we have seen that trajectory, like for 2 decades, that was ludicrous, crazy, like investors relied on the gains more than the cash flow. And I had many conversations, right? Oh, don't worry about it. I buy it for X, and then next year is going to be Y, and that's my gain. I do not care about the rent price. I don't care about anything. And even if I have to, let's say, fork out a few $100s a month, I'm okay with that because the return on the investment, and then it goes even deeper. Then they say, oh, don't worry about it, right? Like they buy $1 million home, then they invest, let's say, 20%, which is $200,000, and then the return is, let's say, 10%. Okay, let's call it that. So next year, the property is valued at 1.1 million. All right, you follow? But how they're calculating, they're saying, look, I made 100 grand, which is 10% on $1 million, right? Imaginary, because it's right there. However, I have only deposited 200,000. So basically my $200,000 made me $100,000, which is amazing. It's 50%, right? That's how they're calculating. But it's not true. Where's the risk involved? What happens when it happens? And today it happened. So now when you're talking to these investors, they're scratching their head and they're like, oh my God, I can't sell because I'm losing equity. Yes, you're losing equity and more. And it's going to be worse. And you cannot keep the property and your cash flow matters. Now you're stuck, right? So therefore it is very, very difficult when these guys are owning multiple properties with minimum down and maximum profit, imaginary profit, right? Time is now a risk, not a solution. Waiting no longer guarantees clarity. Holding no longer guarantees recovery. Every decision has opportunity cost. We have seen it in the market for years now. I would say 2-3 years for sure, where people are gambling because they are applying time, right? Like I'm going to wait for the right spring, right fall, right summer. I want my grass to be extra green. I want the highest price on my street, right? Okay, no problem. Next year, I didn't sell, don't care. Next year, next year, next year, next year. So every year is costing you money, especially in a falling market. You have to remember that. On top of that, we can add another difficulty, which the type of property. If you have the 4,000 or 5,000 square foot corner lot home that nobody wants today, or the buyers are not around to pay your price, imaginary price, then you're sinking even faster, right? So that's another layer on that particular equation. 2026 is a reset year, not a bounce year. Expectations are being rewritten. The market is finding a new baseline. This feels different because it is different. So that is very simple. So the adjustments will have to happen, right? So the adjustments of expectation, the adjustments of the actual investment or cash flow, like everything will be adjusted in a way where some people will unfortunately fall so hard they will not even know what hit them. All right. So I hope you gained some value out of this. Please like, share, and subscribe, and I'll see you in the next one.